Welcome back, traders, for the midweek update on the stock market. As we know, August 31st marks the end of the month, and we are now entering a new month for September, which is historically the weakest month of the year. Now that we know that August was a down month, which closed off negative 1.73% on the S&P 500, we are going to be discussing today on what we can expect to see for September. So if you haven't already, please go ahead and subscribe to the channel. Please leave a like down below for the algorithm. And if you know anybody that would find this video useful, please go ahead and share this video. We would greatly appreciate it. Without further ado, welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back and relax. Let's get right into it. So the S&P 500 is down negative 1.73%. Looking at the triple Qs, we can see that it is not far from the same downfall that we've seen for the S&P 500. This closed off negative 1.5%. Now, as we can see on the charts, we have pretty much a hammer candle on the upper bound range. Now, this to me, it does not really signify much of a reversal, but more so weakness in the stock market, more so of a stall that we are currently seeing. This is more of a hanging man candle formation, since it is closing where it opened. However, we have a large wick which represents the price movement that we have seen during that current month. So we are seeing again the same price action that we are seeing on the S&P 500. However, we can see that on the monthly chart, we are still seeing strong momentum that is still taking place, right? We have this crossover that took place 2 months prior, back here in June, which really set the market higher to a level of 457 on the S&P 500. Now that we are right in between of the previous month's range, we can expect to see more price action to be taking place, knowing with the fact that we have an upper range, which we can mark here at 457, and a lower bound range, which we have seen traded this month in August, down below at 433 on the S&P 500. So we can expect September to trade similarly within this range, but we won't know where it is going to end up for the month. So there are a few things that we have to be careful of going into the month of September, because there's many economic events that are going to be taking place. So we want to take a closer look to see more of what kind of price actions that we can see on a closer time frame. So let's go ahead and take a look at the daily range. So as we can see, again, we have strong momentum again that closed off towards the last few days in August. On the S&P 500, we have this crossover, a positive crossover on the MACD. We are seeing the exact same action on the MACD for the triple Qs. So we know that tech is really leading this rally. There's underlying names that are really representing this move, one of them of which we will discuss later. So we know that, first of all, that we have positive reaction on many different indicators. We have the 15 moving exponential moving average that did not cross over on the daily candle time frame over the 50 moving average. And this is quite more of a positive sign that we are seeing in terms of price action, because whenever price trades above, we can expect continuation in the direction of which the moving average is moving, right? So we are seeing positive reaction on the upper range on the triple Qs, and we are seeing the exact same thing. We are not seeing a crossover. However, when we move over to the weekly time frame, we have a mix, more of a flattening that we are seeing take place on the MACD, but we are still seeing positive reaction on the moving averages on the S&P 500 on the weekly candle. So if we're putting all of this together, we can expect more momentum to the upside just by going off of these moving averages, which is quite positive because any bad news that we've seen that's been released on economic data has been taken up positively in the stock market. And quite frankly, what is happening at this moment in time is all of this bearishness that took place. If you took this opportunity and you heeded my warning that we noticed that the MACD was flattening off and starting to decline, we took our hedges and banked on that. And once we saw this panic, we sold into that panic. And along the way, we were picking up shares to build on the long-term portfolio. So that was a really good move. And now that we have recovered and reclaimed this moving average, that's when we started to change our positioning to be a little more neutral and wait to see which direction the market wanted to go. And now that we have several confirmations to the upside, we are starting to build in our long-term positions to ride the market higher. So those are the things that we are really monitoring at this time. Now, looking at the economic data that we have for September, we can see, let's see, next month. Oh, it's already registering. Okay, so as we can see, we have several events that we need to be monitoring for the month of September. So we can see that we have CPI that's going to take place on September 13. We also have September 20th. This is huge. This is going to be the Fed interest rate decisions. Now, there's been a lot of talk that the Fed is ready to take interest rates higher. Now, why would he do that? Well, because jobs is remaining strong. If the way the Fed will view the job market and the interest rates is really by looking into many factors. And what I think that the Fed is seeing is that even though we can have higher interest rates, there are many jobs to support that type of decision, right? So with a strong economy, the Fed will want to keep interest rates a little higher for longer until something really breaks. And if nothing really breaks, obviously that is good for the markets because it could keep price stability at a normal rate to keep inflation in place to not overly explode to the upside where people really can't afford things. Because remember, the whole idea of raising interest rates was really to tamper down inflation so that way things could be more normalized and affordable for the masses of the working people. So these are the few things that we want to make sure that we are monitoring over the course of September. Um, so really have these marked down in your calendar to be prepared for the September trading session. Now, what I find to be the one stock that's really keeping pace with all of this fluctuation is really Nvidia. So as we can see, Nvidia is really holding up its trend. Well, looking at the weekly chart, we have this explosive breakout from this crossover back here in February of 2023, and it literally just grinded higher and higher and higher. If you look at the daily chart, we can actually see that it is trending quite positively in a positive direction. Despite this fluctuation that we've seen here in the MACD, the market of Nvidia continued to grind higher and higher. And again, we have this normalization back to the zero line on the MACD. And then we finally got this crossover on the moving averages here on this oscillator. And it is pointing higher to the upside. So can this market continue for the Nvidia? It is quite positive that it can. But again, we really, if you're deciding to trade Nvidia, you really want to look at the different levels that it is trading at. Again, if we zoom all the way out, we're literally at all-time high. And this is quite a remarkable chart that we are seeing. Again, we saw this big decline um, to a low of 100, and we are now sitting at 500 on Nvidia, which is pretty crazy. So 500 is definitely going to be a sticky point for it to really break through, but if it can, expect to see it pop over, retest, possibly pull under, and then resume higher. So if you're trying to trade Nvidia at these highs, I would say be very careful. Make sure you have your stops really tight to avoid any substantial losses. But again, Nvidia is an incredible chart to be trading. This stock has the news behind it with AI and its technology. And with things moving fast in the direction of AI, it could really encapsulate that market and really own that market with its own technology that it has in place. So that is what I have for you today. Again, Monday is Labor Day, so there's no trading on Monday. Futures markets will be open, but the stock market will be closed, and we will pick up again on Tuesday. So if you haven't already, please go ahead and subscribe to the channel, like the video, and we will see you on the next one.